Not sure how much money to put into your health savings account each year? Let's look and see what Joe, Jim, and Jessica contribute annually. Joe just enrolled in a high-deductible health plan with an HSA, but he is self-employed, doesn't feel he has any extra money, and any extra money he does have certainly doesn't need to go into an HSA, and so he contributes nothing. Jim just enrolled in a high-deductible health plan with an HSA through his employer. He hasn't taken the time to learn much about how HSAs work, but he thinks he should contribute something, so he puts a total of $1,000 through his payroll deduction each year into his HSA. And then there's Jessica. Like Jim and Joe, the whole high-deductible health plan and HSA thing is a bit new to her. Unlike Jim and Joe, Jessica takes the time to learn more about HSAs through the resources and tools available from her employer and HSA provider. She finds the annual limits on the IRS website and decides to contribute the maximum amount she can. Now, let's fast forward 8 years. Joe, Jim, and Jessica have all changed jobs, insurance carriers, and employers, but their HSAs have moved with them. Any money they've contributed is theirs, not their current or previous employers. Let's say that the unthinkable happens, a fluke accident during vacation that results in a broken leg, surgery, and rehab. Joe, having not contributed anything, has no funds to tap into in his HSA, and with no significant savings, Joe is forced to pay for his medical expenses on a credit card with a potentially high interest rate. Because HSA funds never expire, based on contributions to date, Jim has money available to help him offset the current and ongoing medical bills. Jim is able to pay for the out-of-pocket expense and decides to leave the money in his HSA to grow for retirement because he knows he can withdraw an amount equal to the medical expenses with no taxes and no penalties at any time in the future, including after he retires. Jessica, on the other hand, has been making the maximum contribution allowed for the past 8 years, so now she has flexible options. She has more than enough money in her HSA to cover current medical expenses, but she also has the option to pay out of pocket, similar to Jim, and allow her HSA funds to accumulate even more for a healthy retirement. The moral of the story is simple. Be prepared. Be Jessica. Log into your account today and consider making a contribution.